Next question. From following information is given that the sales is 1 lakh rupee, variable cost is 20,000 rupees, contribution is 80,000 rupees, fixed cost is 40,000 and operating income is 40,000. You are kindly requested to calculate. The first question is DOL, degree of operating leverage, and so on questions are there. I want you to tell me answer of the first question in the chat box. So write down answer. DOL, it is contribution upon EBIT. Amount of the contribution is 80,000. Amount of the EBIT is 40,000. So the answer is 2. That is the first question answer. Second question. If the sales increases by 10%, calculate a revised operating profit. I request all of you to write down answer along with me. Working note number 1. Calculation of percentage change in EBIT. In that, DOL is measuring what is the percentage change in EBIT for every 1% change in sales. So in that case, percentage change in EBIT is equal to DOL into percentage change in sales. We already have found that this is 2 into 10%. That comes to 20%. So percentage change in EBIT is 20%. Afterwards, we will make the calculation of revised EBIT. As far as the revised operating profit is concerned, it is current plus change. The current operating profit or EBIT is 40,000 plus 40,000 into 20%. So 40 plus 8, that comes to rupees 48,000. I request all of you to write down answer for the revised operating profit. Now this answer can be calculated with an alternative method also. Sales of the company is right now 1 lakh plus 10%. It will increase to 1,10,000. Variable cost is right now 20,000. In that, so there is an increase by 10%. That comes to 22,000. Contribution is difference between both of them. That is 88,000. Less fixed cost. Fixed cost is not going to change. It will remain same, 40,000. So earning before interest and taxes 48,000. Friends, from examination point of view, listen carefully. From examination point of view, if at all there is no clarification made, we can do answer by either of the method and either of the method is acceptable. However, sometimes what happens is the question is clearly providing that using the concept of leverage, you are required to calculate the answer. If at all we have been provided with a clarification, let's say using the concept of leverage, you are required to do answer, then in that case it is mandatory to follow the first method instead of the second method. In that case, going with the first method is necessary instead of the second method. If at all there is no such clarification made in the question, then in that case we can do answer by either of the method. Of course, it will give the same answer. At the same time, say we understand and say either of the method is acceptable. Try to do answer for the third question by both the methods and put your answer in the chat box. Now answer for the fourth part of the question. If the company wishes to have, if the sales decreases by 20%, calculate the revised operating profit. I request you to write down answer along with me. Working note number 1, calculation of percentage change in EBIT. So in that, D.O.L is equal to percentage change in EBIT upon percentage change in sales. So percentage change in EBIT is equal to D.O.L into percentage change in sales. What is D.O.L? D.O.L is, in our example 2, multiplying with the percentage change in sales. You can see it reduces by 20%. So it reduces by 40%. Like that we understand. Afterwards, calculation of revise the EBIT. How revised EBIT will be calculated? It is current EBIT minus change. Why? Because there is a reduction. The current EBIT is 40,000 minus 40,000 into 40%. 40,000 minus 16,000. That comes to 24,000. That is the way the revised EBIT is calculated. Again, this answer can be calculated in a table method. Sales is 1 lakh minus 20%. That comes to 80,000. Variable cost 20,000 minus 20%. That comes to 16,000. So contribution, it is 64,000. Fixed cost will remain same, 40,000. So operating income is 24,000. So either of the way we can calculate the same. I want somebody to write answer in the chat box. What is the profit volume ratio? Friends, contribution is 80,000. Sales is 1 lakh. So profit volume ratio is 80%. Write an answer. At any level of the sales, PV ratio will remain same. So profit volume ratio, it is also called PV ratio. It is contribution upon sales into 100. The amount of the contribution is 80,000. Sales is 1 lakh. So that comes to 80%. I want you to answer the fifth part of the question in the chat box. if the company wishes to have EBIT of rupees 50,000, calculate the required increase in sales and value of sales at that time. Please answer the fifth question in the chat box. So over here we can calculate the answer in this way. Column number 1 is particulars. Column number 2 is answer. In that we can start with the sales less variable cost. That is 20% of the revenue. Because we know that the contribution is 80% of the revenue. Contribution is 80%, less fixed cost. So difference of both of them will be EBIT. The question is providing the information that the amount of the EBIT is 50,000. What is the amount of the fixed cost? It is provided 40,000. So amount of the contribution is 90,000. How this 90,000 is calculated? It is calculated as 50 plus 40. Sales value. It will be found as 90,000 into 100 divided by 80, because PV ratio is 80%. So for every 100 rupees of the sales, contribution is 80. So it is 1,12,500. 1,12,500 into 20%. That comes to 22,500. So we understand something like this. In order to increase EBIT to rupees 50,000, comma, sales should increase by rupees 12,500, comma, it should increase to rupees 1,12,500. That is what we understand. Please write an answer. Please give answer for the sixth question. If the company wants to ensure EBIT is not decreasing below 28,000, calculate maximum affordable decrease in sales and value of sales at that time. Please give answer of the sixth question. So again we start with the sales. From that we will deduct the variable cost. Contribution is 80%, so variable cost is 20%. So contribution is 80%. Less fixed cost. Amount of the fixed cost is 40,000. That gives us EBIT. It is 28,000. We can compute the contribution as balancing figure. That is 68,000. How 68,000 is calculated? 28,000 plus 40,000. Contribution to sales ratio is 80%. So sales is 68,000 into 100 upon 80. The answer is 85,000. So 20% of 85,000 is 17,000. So we understand that the current sales of 1 lakh should not fall by more than 15,000. It should not fall below 85,000. Right an answer? In order to ensure that current sales is not falling below, current EBIT is not falling below rupees 28,000, comma, sales of the company should not fall below rupees 85,000, full stop. It should not fall by more than rupees 15,000. How this 15,000 is calculated? It is 1 lakh minus 85,000. That is what we understand. So friends, over here a summary of the entire answer. First of all, we have to find DOL, that is contribution upon EBIT. In the second question, we are required to make the calculation. If the sales increases, what is the revised EBIT? So sales increases by 10%, DOL is 2, so EBIT increases by 20%. So from 40 it increases to 48. Or otherwise, say we can have a table presentation. Going with the percentage change formula is mandatory if the question provides that say you are required to use the leverage concept to give answer. In the third question, sales is falling down by 20%. So 20% into 2, that is a reduction in the EBIT by 40%. So 40,000 minus 40%, it decreases to 24,000. Or again you can have a table. Then profit volume ratio is a simple answer, contribution upon sales into 100. And dear students, it can be calculated at any sales level, it is going to remain same. Next is, say provided to us that the company wants to increase the EBIT to 50,000. So we have made the backward working. For 50,000 of EBIT, contribution should be 90,000 and PV ratio is 80%. So every 100 rupees of the sales, contribution is 80. Suppose we want to have contribution of 90,000, sales should be 1,12,500. So it should increase by 12,500. It should increase to 1,12,500. And the last question, the operating income should not fall below 28,000. So taking 28,000 as base, contribution is found. Based on the contribution, sales is found. And accordingly, we understand the current sales should not fall below 84,000, should not fall by more than 15,000.